Good morning from the Protos newsroom. The date today is Monday the 23rd of November, and you're listening to the Protos Daily. The main headlines this morning. Data shows PayPal bought up to 70% of all newly mined Bitcoin in the past month. Hackers steal $20 million from Pickle Finance, and in the latest DeFi attack, the new patent suggests Monero could soon be tracked by police. At the present time, Bitcoin is trading at $18,730 up 3.6% for the day, as Ethereum has spiked by over 11% to the current level of just under $600. PayPal's decision to start offering cryptocurrency services is already having a huge impact, with the payment giant estimated to have bought up to 70% of all newly mined Bitcoin over the past month. In its latest blockchain letter, hedge fund manager Pantera Capital noted demand for crypto via PayPal has hit the roof, and if growth continues at its current rate, PayPal would be buying more than all the newly issued Bitcoin per day within weeks. PayPal's new crypto service, announced in late October, will allow some of its 350 million active users to buy, hold and sell Bitcoin and other digital assets, and will eventually let them purchase things from PayPal's 26 million merchants with their crypto. However, merchant transactions will be settled in fiat. The service is currently only available to US users, with the rest of the world set to be integrated later. It's important to note that PayPal is not the first major payments provider to support Bitcoin, but it is the biggest. US payments prince Square, which is led by Twitter's Jack Dorsey, added Bitcoin to its Cash App back in 2018, and now funds its development via its crypto-specific business wing, Square Crypto. The company has also recently bought $50 million worth of Bitcoin, representing around 1% of its total assets. While Square doesn't boast as many users as PayPal, the rate at which it's selling Bitcoin has some insiders discussing the possibility of an incoming supply crunch, which would see its price skyrocket once demand properly eclipses the amount of Bitcoin distributed by the network's miners. Square sold 160,000 Bitcoin in the third quarter of 2020. During this time, around 81,000 Bitcoin would have been mined. PayPal's user base is roughly 16 times the size of Square's. DeFi protocol Pickle Finance has found itself in a bit of a pickle, having lost $20 million worth of user DAI tokens to hackers this weekend. This incident differs slightly from other DeFi hacks lately, which have mostly relied on gaming the system to win a loan that simply doesn't have to be paid back. Instead, Pickle developers say the hackers deployed so-called evil jars, malicious functions that, for whatever reason, were compatible with the Pickle's smart contract system, allowing the attackers to drain millions of dollars worth of user funds almost instantly. Regardless of the method used, the effect on the project's native crypto token is pretty much the same. The price of Pickle more than halved directly following the attack, from over $20 down to $8.70, before rebounding to its current price of $11.80. Earlier this month, blockchain analytics crew CipherTrace found hackers have stolen more than $100 million from poorly coded DeFi smart contracts this year, which have mostly been deployed on the Ethereum blockchain. The sudden uptick in stolen funds related to decentralized finance has now caught the attention of international regulators, including the US Securities and Exchange Commission, as well as Europe's Financial Action Task Force. CipherTrace has now filed 2 patent applications in its quest to track privacy-focused cryptocurrency, Monero, which has so far proved practically impossible for international authorities. The patents describe forensic tools purportedly able to reveal Monero transaction flows for financial investigation. Unlike Bitcoin, Monero hides identities of both the sender and the receiver when processing transactions, and even keeps the amount a secret, making it one of the few, if not the only, crypto which protects the identities of its users. Any Monero sent via the network is also immediately mixed with other coins, which makes mapping their provenance especially difficult. This, says CipherTrace, has led both law enforcement and cyber criminals to take a particular interest in Monero. CipherTrace says 45% of darknet markets now support it, supposedly making it the number 2 cryptocurrency for criminals behind Bitcoin. Launched back in 2014, Monero is currently the 16th largest cryptocurrency by market capitalization. Earlier this year, the US Security Exchange Commission handed out 2 $625,000 contracts for the development of analytic tools that could trace Monero and other so-called privacy coins like Zcash. Around the same time, a number of cryptocurrency exchanges, including Coinbase, delisted Monero, presumably bowing to the pressure from regulators who've so far been unable to monitor the blockchain. News of CipherTrace's supposed patents hasn't affected its price. Monero is up 7% over the past week, now trading at $126. Crypto-focused asset managers Pantera Capital has raised another $5 million for its Bitcoin fund, bringing its total to $134 million. The news comes just as fellow Wall Street money folk Morgan Creek Capital Management and Exos Financial filed applications with the Security Exchange Commission to open their own Bitcoin-focused fund. While the raise comes as part of an apparent wave in institutional demand, Pantera's Bitcoin fund was actually the first US-based fund of its kind, having launched in 2013 when Bitcoin traded between $50 and $250. In 2017, Pantera told investors its Bitcoin fund had returned more than 25,000% since then. As for how Pantera is doing in 2020, its Bitcoin fund gained 61% between January and September. Its broader digital asset fund earned 168%, and its 2 ICO funds hit 323% and 270% respectively. Profits propelled by projects like Yearn Finance and Polkadot. It's likely those profits have increased since then, thanks to Bitcoin's latest bull run. Singapore-based KuCoin has now restored the deposit and withdrawal services of all tokens, as it seeks to get back on its feet after one of the largest breaches in cryptocurrency history. The exchange lost more than $280 million in September when hackers got their hands on private keys to the exchange's hot wallets and gained control of huge amounts of Bitcoin, Ether, Tron, Ripple, and a host of other currencies. KuCoin immediately froze all wallets and disabled services, and has since managed to recover $204 million worth of the stolen funds. KuCoin's chief executive Johnny Liu revealed last month that the suspects have been identified with, quote, a substantial proof at hand, and that police were close to taking action. However, no more details have been released at this time. Due to ongoing legal proceedings, daily withdrawal limits will be in place for certain tokens, but users have been assured that these limits will be removed after the judicial process has been completed. Until then, tokens with daily limits will have 0 trading fees. And, in our public service announcement for the day, we're highlighting a story which nearly saw a Cardano whale pay a hefty price after he was fooled by a series of well-designed fake websites. The warning comes by way of crypto analyst Leon Fu, who was recently duped out of hundreds of dollars worth of Cardano after clicking a link on a fraudulent website cloned to look identical to niche crypto outlet CoinDesk, except the domain had an altered letter. The dodgy link sent Fu to another fake website, this time pretending to be the one of Cardano Foundation. Fu was originally looking for a website to help stake his crypto, but ended up on a third spoofed site, which was ultimately designed to steal his Cardano. While Fu indeed lost hundreds of dollars to the scam, he intended to stake a lot more, the damage only mitigated by his smart decision to send a test transaction before the full amount. Such carefully designed scams have been on the rise. Prominent web host GoDaddy was the recent target of a sophisticated social engineering campaign that saw crypto exchange Liquid raided for user information. Hackers apparently convinced GoDaddy support staff to reroute domain names in a bid to intercept sensitive data, and more than half a dozen sites reportedly affected. So for all our listeners, please take the time to triple-check domain names and wallet addresses, especially as volatility returns to crypto markets and demand increases. And remember, not your keys, not your crypto. Thank you for listening. To stay up to date with the latest from the world of crypto, make sure you subscribe to the Protoss Daily on Spotify, Apple Podcasts, and all other major podcast providers.